Good. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'll be presenting now the Asian Session Live Market Analysis and the Forecast webinar. Today we are on 25th of November, the end of this week, Friday. Between 5 and 5:30 GMT, we'll try to review the forecast, what I have given it on 21st. On Monday, how exactly the market is expected to behave, and whether the market has moved in tandem with that of the forecast or against, we will see. And this is being the faggot of the year. The market is known to make very volatile moves and extended stop-ins, etc. Besides, after the of the US presidential election, normally the players try to go in for a negotiation with a new setup and try to establish very good rapport, and then later on they try to make some big USD gaining move in order to accumulate buy position in other majors. Then later on, during that of the year-end time, they make an upward squeeze and induce the traders to go in for a short covering in other majors. So this is the way they try to make some extreme moves. On the downside, USD gaining move, and on the upside, they make the USD weakening move. As a result, you find that traders get trapped vulnerably during such very big volatile moves which happen during that of the year-end time. So we will discuss more about this particular swing after looking into that of the forecast. Now this is the forecast sheet what I displayed it on 22nd Tuesday, and the market has made the slide in the case of Euro and GBP, and they gained the levels in the case of GBP but not Euro in order to handle Euro GBP cross. Before coming to that of the majors, they are trying to handle the crosses in a big way, and in that process we have seen that they gained the levels in the case of GBP, dropped the levels in the case of Euro. As a result, Euro GBP cross, they dropped it. Besides, GBP gained the level, and also USD CHF gained the level, and that is again a contrarian move, and that has induced GBP CHF to gain substantially. So they are into that of trapping the traders who are caught in crosses at the moment. Then they'll come to that of the majors. So as we have seen that the slide, they have been doing it without making much of a rise, and then today also they made that swing on the downside in the case of Euro and GBP, and on the upside in the case of USD and USD CHF, and started making the firming up move. And they are expected to firm up slowly during that of the European session, and then considerable gain could be seen in the case of Euro and GBP during that of the US session. So they actually handled predominantly yen and yen crosses. USD yen is known to make one-sided move. Less drop and more rise, less drop and more rise. That sort of moves they continue to do, so that the traders who have been selling on the rise have to forcibly go in for a short covering and turn long. Then once the predominant of the traders turn long, thinking that it will go to still higher level, then the players hold it and distribute the positions to the of the short sellers and induce them to do the short covering. Later on, slowly slide USD and yen crosses. So this is the normal practice they do, and we have seen many occasions wherein they make about 200-300 pips move in one go in the case of yen and yen crosses. And the yen crosses like Euro yen and GBP yen, they even made 500 pips one day move, and that is possible because once they focus only on yen and hold the rest of the currencies, all their money will be deployed in order to rig a specific currency. And since it is year-end time, they just gain substantially the levels in the case of USD yen mainly to drop big in coming days. Now, what we have seen so far is a very aggressive move in some selective pairs like USD and USD CHF, and also in the case of Euro nominally. And Australian dollar and GBP, they just slowly gained the levels, but they did not drop them correspondingly. So this is mainly to handle the crosses by making variable moves. Then later on, they are expected to make during the next week the trend reversal, monthly trend reversal time. They are expected to make very aggressive move in the market, and that could be very volatile. They could just use some attribute and gain the levels quickly in the market. And when all the traders think that okay, the bottom is over and that probably Euro and GBP could go up further, then when they ease out, then suddenly the players will drop them again. That is the nature of move they normally do during the year-end time. So they induce the players to follow some sentiment, either USD weakening or USD gaining sentiment, and then suddenly reverse. So the only way to sustain in the market is expect the unexpected and use the contingency plan of the hedge order to limit the risk and do either way trades in the market. And you have to be very calm and handle it carefully, following strictly the type of moves they are doing it. So if they are doing an extended move, wait for 2 hours and then close the hedge. If they are doing intentional move, wait for 2 sessions and the start of the third session and then close the hedge. And if they are making stop and watch for 30 minutes and close the hedge. That way, if you try to do it, you'll be able to do either way trades successfully. Then coming to that of the levels in which they just made the big moves in the market. The case of Euro, they expected low was 1.06, but they came down to 1.05 level, 1.0518 started gaining. But actually, they did not make much of a gain from that of Monday. They have been all along holding low throughout the week. So not much of a gain happened beyond 1.0650 area. In the case of GBP again, they came down to 1.2314, estimated low was 1.2325, and then they gained up to that of 1.25 twice, and they are just holding it in the narrow range of 200 pips. In the case of yen, they are expected to make some big drop before making the rise, but they made the one-sided rise after forming the low as 110.28, gained up to 113.90. So instead of making a drop, they gained the level as far as USD is concerned, which is against the expectations of the forecast. Similarly, in the case of USD CHF, the denominator currency, they just continue to gain the level, and 1.0069 happened to be the low. They did not drop, and then they continue to gain beyond 1.01 up to 1.0192 level. And in the case of Canadian dollar, they formed the high as 1.333535, so around the expected level, and came down to 1.3378, and not lower than that. They are simply holding around 1.3492 level now. In the case of Australian dollar, 0.7311 is the actual low. They came, the estimated low was 73.25, and they are supposed to gain, but they are holding it, and they gained only up to that of 1.7445, and still holding closer to that of the high, and they could make further gaining levels. If you look into the market, we'll be able to understand that Euro GBP as well as USD are showing positive net change. So that indicate that they are making contrarian move in order to handle the yen crosses. Later on, they will come to that of the European crosses by making contrarian move even in the case of USD CHF. Then also similar contrarian moves are seen in the case of USD CAD and Australian dollar. So basically they are into that of handling the crosses. That's what it indicates. So after handling the crosses, they are expected to come to that of the majors from next week onwards. So be careful during that of the year-end time, and the players are known to make some big moves in the market, telling some stories. So use the hedge to limit the risk and try to earn by doing either way trades. So once the position makes profit, don't be in a hurry to close it. You try to keep stop at entry and watch how far they are going, and later on you maximize the profit. And that way, if you do it, you'll be able to easily do either way trades, and the profit you have earned in the hedge will try to improve your free margin, and thereby you will not incur additional blocking of the free margin. Now coming to that of the market reading technique, I noted down the initial lows and the highs around 3:30 GMT. Euro formed the low 1.0539 and 1.0562 is the high. They just breached the high and staying above, indicating that they are expected to slowly gain. And in the case of GBP, 1.2429 is the low, 1.2454 was the high. They have gone up to that of 1.2458 and come down, indicating that they will gain the levels in the case of GBP first. Afterwards, they will hold GBP, sorry, gain the levels in the case of Euro, hold GBP, thereby Euro GBP cross will gain, and later on they will gain the levels in the case of GBP as well as the sentiment is established. Now, in the case of USD, 113.20 is the low, 113.90 is the high. They just made one extended upward move during the V hours, and they started making the slide from the market, from that of the high in the case of USDN. This is the way they quickly gain the level and start dumping their positions before making a big drop from next week. Then in the case of CHF, 1.0162 is the low. They just breached the low and formed the new low 1.0155, and the high was 1.0186, and that is not breached. So which indicates that USD CHF again they just gained quickly the levels in order to make the slide more during that of the European and the US sessions. Then in the case of Canadian dollar, 1.3488 is the low. They just breached the low and formed a new low, 1.3481, and 1.3515 is the high which is not being breached. Here again, they are expected to make the swing and slide moves in the case of USD CAD. Then Australian dollar, 0.7400 is the low, and 0.7436 is the high. They just breached the high to 37 and holding it. Normally, the commodity pairs lead the rally and lag behind. Slowly, they could gain the levels in the case of Australian dollar, but they could gain more levels in the case of euro to start with, and later on in the case of GBP and Australian dollar could gain initially some levels and afterwards hold, and slowly they will make subdued moves in the case of Australian dollar, but euro and GBP are expected to make a considerable gain. So always keep in mind they create the market sentiment and act against that of the traders. So they just created the US dollar gaining move sentiment, and then they are expected to reverse the market to trap the traders. These are all the recommended trades for today. Near that of the low, we can take a buy in the case of euro and GBP during that of a gap time or during that of the early part of the European session, and then try to book profit during that of further rise during European as well as US sessions. And in the case of Australian dollar, also you can keep slightly about 20-30 pips below the market level. You can keep the buy limit order, but still use the hedge order to limit the risk. Now these are all the market timings. So they are just making some subdued moves during the mid-session. From 6 GMT onwards, they could make some nice upward move in the case of Euro and GBP, and gap time also they are expected to make some swings and then start gaining the levels during the European session. So European session gain could be a firming up, but US session gain could be some visible rise. So if there are any questions, you can ask me. I'll be willing to answer those questions. There is a question from Bren. When there is a gap time, you have said that the price comes from the low or high and goes through. Yes. Does it ever start from in between both? And also, I want to know if you recommend just waiting for the second move, which penetrates the low or high, or can we catch both moves with a hedging? Now, as far as the gap time trade is concerned, sometimes what happens is they just make a false move for 5 minutes during the gap time. So, say for example, the gap time starts by 7:30. Then from 7:30 to 7:35, they could make some pretension move and then make some false move quickly in that. Suppose they make a dip for about 5 minutes, then they could gain the levels during gap time and start making the slide during the early session. Or they can go up to the mid of the gap time. From 7:30 to 7:45, they could make a drop, and 7:45 to 8, they could gain the level, and from 8 to 8:15, they could make the slide and then start gaining the levels. So you have to watch carefully using the live market quote page when they stop cutting the intermediary low or the intermediary high. Pip by pip, if you watch carefully during the gap time, you will be able to really do the bottom fishing or buy, and that will not be hedged. So it requires your more patience and also your focus in the live market quote page alone. If you look into that of the charts, live market quote page, and all other analysis, etc., your mind will be really disturbed, and you will not be able to really use the live market quote page as a single tool to read the intentions of the player. See, we are trying to use the live market quote page to read the intentions of the player, what they are trying to do. So as I explained, the quick moves or false moves in the market, whenever they make a quick move, calmly watch when they are stopping, and also look into that of the net change level to find out how much of move they have done at a given time. Sometimes, when they breach the psychological level, it will appear as if they have made a very massive move. But if you look into the live market quote page, you would have noticed that they would have gained about 40-45 pips only. So gaining or dropping 40-45 pips is not a big deal for them. But when we unexpect the rise, then suddenly when they make a rise, then we try to develop heart attack. So don't be carried away for small money. Don't lose your life. So I only suggest that try to read the intentions of the players and avoid reading too much of other articles. As a result, you find your mind become really distracted. Once the mind is distracted, you find it extremely difficult to focus on your trade. So you are entering into the market mainly to earn money from the other market, not having any sort of commitment that I should read at least 10 articles about the market today. No, that is not your objective at all. But in the process, when the positions start making loss, you try to search where exactly you could get the clue. Suddenly you jump into that of the long-term calls, and that is not at all needed, because you have to find out what is going to be the type of move for another 30 minutes or 1 hour. Because That is going to determine how much of free margin you are going to have it against. So how you are going to manage the trade is vital, rather than thinking about how far the rise could be, how far the drop could be, etc. Because see, the players make the move with a purpose. Wherever they come across cluster of stocks, they try to go up to that and hit the stocks. Besides, when they are gaining the levels in the case of thin volume currencies like USD, when the traders continue to sell, then automatically the players are not able to offload their positions. So they gain quickly the levels during the start of the session or end of the session, etc., and create more panic by showing that usable margin is eroded substantially. Then the trade is going for a distressed trade. But actually, without making much of a buy, they simply gain the levels and then afterwards slowly offload their positions. So this is the normal strategy. That is why I always say the quick moves or false moves in the market. That shows the true intentions of the player. When they quickly rise, that they wanted to offload. When they quickly drop, they wanted to buy. So trade along with them, then you'll be able to see that you are able to really earn money from that other market. There is no need to go through any other articles, etc. So here Brent's question with regard to using hedging. So if you fine tune your entry, watching it carefully during the gap time, and whether they are doing it for 5 minutes or about 15 minutes during the gap time, see how far they are coming down and they stop cutting, going below a certain level. Then you take a buy. Then by end of that gap time, you will be able to see the profit straight away. You can use the hedging to limit the risk, but it doesn't mean that simply you can enter into the market. You fine tune your entry so that you are not hedged. So in that case, you are using the hedge to limit the risk similar to that of stock. Then Jason, what about USDN? USDN, they made a massive rise mainly to trap the traders, those who have gone short, to do the short covering. And after making a quick rise to that of 113.90, they are expected to come down. They already come down below that of 130, 13.50, and now trading lower. Slowly they will come down and breach the low and continue to breach and continue to drop as one-sided drop. So you have to keep in mind, already they started showing negative net change in the case of USDM. Once they breach the low and not sustaining there for more than, and if they sustain more than 30 minutes below that of 113.20, understand that they are going to make an intentional downward move for 2 sessions in the start of the 3rd session. USDN is expected to come down drastically during the year-end time. Any other question, please? Okay. Gold is crashing and now trading in the range of 1170 to 76. What is your forecast? As such, you would have noticed that gold made the gain to 1,300 level, and then started making the drop to 1,200 and then come below that, and the players are buying it now, holding low and buying it again year end. They are expected to gain it to 1,300 level. Then Brent, after an intentional move, we have said that there is a stop and at the end of the day. If so, then how many pips does it normally go, since the net change has to finish the day with 100 or more pips? See, by when they continue to gain the level, those who have gone short, in the case of Euro, for example, then they will go in for a short covering. And sometimes what happens, the trade is going for an average when they are gaining the level. Take further sell, thinking that it will drop. And if it is not dropping, they will come for a short covering. At that time, what they do is just about 15-20 minutes before the closing for the day, they make one extended upward stop, and so that there will be a margin pressure on the traders who have gone short. Then they will automatically go in for a short covering. And later on, the players book the profit by dumping all their buy positions. So at the end of the day, you find that the players go with very light positions. They don't have much of open positions. So they are very, very careful in that way so that they are not vulnerably caught in the market by holding positions. Only the traders hold the positions for a prolonged period, but the players offload their positions as quickly as possible. Yes, normally once they gain the levels as an intentional move, and they close it more than 100 pips, then I change levels. Then do you think that the players will make big shaky moves for the news decision? Italy. See, every time you come across such thoughts, that type of volatile moves in the market, because they wanted to make such moves so that the traders will be able to really get confused. And many of the traders avoid taking positions during that of the data release time. But every time you come across the data release every day and every session, something or the other, if there is no data release, then probably what they do is they try to create the rumor and act against that of the traders. So it is something like when the next wave is going to come in that sea, when you are standing in the beach. So any big wave, anytime it can come, it is a question of how the traders have committed positions. When the traders have committed big positions, then the big wave will come. The traders have not committed position. The players are not interested in showing a higher or a lower level. By that, they don't gain anything. So they are known to make some big moves during that of the year-end time, especially December and January, also New Year beginning time, to induce the traders to lose big. So use the hedge order to limit the risk. We'll be able to really make some nice profit from the market. But as far as Euro and GBP are concerned, any level you take a buy or a sell, if you hold calmly, you should be able to see profit within a month or two. But in other currencies, they make one-sided moves. So if you are interested in doing the hedging trading, either way trading, focus only on Euro and GBP. We'll be able to really make substantial profit from the other market. That is what my humble suggestion will be. Any other question, please? Okay, there are no questions coming forward. Okay. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar. Then I'll come back on Monday and give you yet another forecast Asian Session Live Market Analysis webinar to explaining the expected market moves during that of the month end and the new month beginning time. So you have to be very careful during that time, trade carefully during the month end and also the fag end of the year. In a thin volume condition, the players are known to make some havoc in the market. Don't get trapped vulnerably and lose your account. Use the hedge to limit the risk. And so you will come across either way presentations. People might say that euro might gain or euro might drop, etc. Ultimately, you have to focus on your trades. So don't be bothered about the forecast. You focus on your trade and see that your trading strategy is going to protect you from all such big moves in the market. Wish you all best in the trading and see you on Monday.